अस्सलामुअलैकुम फ्रेंड्स, वेलकम टू माय चैनल। उम्मीद करता हूँ कि दोस्तों आप लोग खैरियत से होंगे। दोस्तों आज की वीडियो का हमारा टॉपिक है प्राइवेट मॉर्टगेज इंश्योरेंस वर्सेस मॉर्टगेज इंश्योरेंस प्रीमियम्स। अगर आप चैनल पर नए हैं तो पहले जाकर हमारे चैनल को सब्सक्राइब लाजमी करें ताकि इस तरह की वीडियो हम आपके लिए लाते रहें। सो फ्रेंड्स, बगैर देर किए हम जाते हैं अपने टॉपिक की जानिब। प्राइवेट मॉर्टगेज इंश्योरेंस वर्सेस मॉर्टगेज इंश्योरेंस प्रीमियम्स। While PMI applies to conventional mortgages with less than standard down payments, you will likely need to pay MIP if you get an FHA loan. Here's how they work. Private mortgage insurance. This is typically required for conventional mortgage borrowers who put 3% to 19.99% down. Borrowers who pay PMI are more likely to be first-time home buyers and are usually purchasing, not refinancing. They also tend to have slightly higher debt to income ratios and lower credit scores than conventional borrowers who don't pay PMI, according to the Urban Institutes. Mortgage insurance premiums. This is required for borrowers who get a loan backed by the FHA. The main reasons to pay an MIP is that doing so might be the only way you can qualify for home loans. The Urban Institute finds that FHA borrowers tend to have a lower credit scores and more debt relative to their income than conventional borrowers who pay PMI. The percentage fluctuates from year to year, but overall about 30% of borrowers who carry a loan with a guarantee or mortgage insurance pay MIP, and others 42% pay PMI, and remaining 30% take advantages of the loans programs offered by the Departments of the Veterans Affairs, which includes a lender's guarantee but does not require PMI or MIPS. If you take a loan backed up the US Departments of Agriculture, you will have to pay an upfront loan guarantee fee of 1% and an annual mortgage insurance fee of 0.35% of the loan amount paid monthly. How to get right of mortgage insurance. The process of getting a right of mortgage insurance depends on which type you can have. For a conventional mortgage with borrowers paid monthly premiums, you can get right of PMI after you accumulate 20% equity by paying down your mortgage. You can also get right of PMI if your home's values goes up enough to give up 25% equity and you have paid PMI for at least 22 years. Your home's value goes up enough to give up 20% equity and you have already paid a premium for 5 years. You'd put extra payments towards your loan principals to reach 20% equity faster than you would have through regular monthly payments. You will need to ask your lenders in writing to waive PMI is one of these things happens for cancellation based on an increase in home value. your lender may require an appraisal. You will also need to be current on your payments and have a good payment history for the lender to grant cancellation at this point. The passive way to get rid of insurance is to make mortgage payments every month until you have 22% equity. Federal law requires your lenders to cancel PMI automatically these points as long as you are current on payments. Another way to you might get rid from a PMI is through refinancing to get a lower rate or shorter term. You won't need PMI on the new loans if your home's loans value has gone up enough, or you cash in refi, which means making a lump sum payments at a closing to lower your mortgage balance. सो आई होप फ्रेंड्स आज की वीडियो आपको हमारी अच्छी लगी होगी। मिलते हैं अगली वीडियो में। अल्लाह हाफिज़।